Good evening and welcome to the Australian Stock Market Show. My quote for tonight is from Rakesh Jowinjawala, an Indian billionaire, business magnate, chartered accountant, and the list is a mile long, stock trader and investor, who said growth comes from chaos, not order. We've seen so much chaos in recent years, and this will allow great growth stocks to continue their path to the top rather than focusing on what has already occurred. Savvy investors will look forward to the next growth opportunity and capitalise on it. So tonight, in our no BS approach to all things stock market, we will share our thoughts on the best growth opportunities in 2023 and beyond. And of course, that means we take a look at some great growth stocks to share with you. So tonight, this is all part of our goal to help you take another step towards creating a better financial future for yourselves and your families. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators.
Hey, how you doing?
We made it.
Just.
Can you believe that?
I know. It's like a brand new studio that we've borrowed. I don't know how you borrow a studio. You can't it's like take it away and bring it back, can you?
No.
But we've borrowed a studio.
I feel like we're like these little tiny ants in this huge place.
I know.
It's very cavernous, isn't it?
Well, it is for the viewers who are watching this. Normally we're in this small, tiny studio, but this one is like 5 stories
huge,
high.
isn't it? Oh, gosh.
And massive that we're using for probably till February, maybe even till late February while we're building our new studio. So it looks a bit still funny at the moment. It's also, we've got some technical difficulties, but I'm crossing my fingers everything works tonight. But you did a great job under duress I'm not giving you duress, but under challenges for the teleprompter.
Thank you.
Well
That's
done.
very kind of you.
I am looking forward to tonight's show because it's going to be a ripple one.
I'm looking forward to tonight's show. How many shows have we got left?
One more. So one more for this year, then we're going to take a break of about 4 weeks, and then we come back in 2023 on Talking Wealth. But, so we're going to do a little bit of the live show, I believe, on YouTube, but most of it we're going to do on Talking Wealth, and we're going to expand. We're going to do a whole lot more that we just can't do on YouTube.
Yeah, I'm so looking forward to that.
So there's going to be a hell of a lot more content, there's a lot more education, a lot more getting into teaching people, which we weren't able to do on YouTube, So to me, it's a really exciting time. So if you haven't registered at all for Talking Wealth, get onto it, talkingwealth.com. But I think we better get into our first segment. But before we get into our first segment for tonight, as you can see, we really are in a different studio, and so we're unable to take live calls on the show. So if you do want to chat to Janine and I and ask us a question that's been on your mind, then what we're going to do is you can text us on, now get your pen out, 0423 959 846. That's 0423 959 846. So get texting your questions now.
While we wait for you to text, it is the first Tuesday in the month, and this means that we take a look at the Australian market. So let's get into the charts.
Wow. We've got the All Ordinaries Index up here, Janine, and I know you can see it because it's way over on my side of the table, not normally where the computer is generally. What's your take? I mean, I hear my take all the time.
Look, I think we haven't seen this sort of a move on the market for, probably not since after the COVID correction. And so one would have to think that, this is a reasonable opportunity to call the low, given that it's gone through that high in around August.
That one? Yep.
And we're now, a number of months up, and the trend is definitely up. So, because of that, you'd have to say that as long as it keeps, I'd expect a couple of weeks down from here, potentially. There could be 1 or 2 weeks down from here. But if there's any more than that, then I guess I would just review because it is getting so close to those tops. But from a medium to longer term perspective, we've been waiting for this to happen, and it's the best looking chart that I've seen in some months, I'll say.
Well, currently we're down just around 6% from an all-time high. Now, I know what you were saying. This move up here was 8 weeks, and I was talking about this yesterday on my market report. This move up from that low there from that week on the 7th of October, we're also up 8 weeks to last week's high.
Yeah.
This one has been slightly stronger, but pretty much the same momentum Other than this week here, which was mid-November, very strong momentum through there. But the rest of it has been running at the same spot.
How many times in history do you think, are there many times in history where we would see the market trade up by more than 8 weeks straight without a correction?
And this is what I showed back through here when we got up to that high in August. I was saying through July, I said, I'm expecting a peak in the next 1 or 2 weeks. We're going to come on down. It just kept going up. So every week I was saying, it was almost making a lie of me because it kept wanting to go up. And I've been saying the same through here. Since about that bar, that big bar there, I've been saying, we're going to expect 1 or 2 weeks down, but it just kept going up.
Yeah.
But in this period here, I actually did go back on the All Ords to try and find how many times it's gone up 8 weeks straight without any down bars. And I went back years and years and years.
Yep.
So it's uncommon, and yet we've seen it twice this year.
So when you're making statements based on probability, and that's
Correct.
really all you can do, isn't it?
Yeah, absolutely. And right now the probability says the more it's going up, the more chance it's got of coming down, because markets just don't go straight up. They always come down. So I'm saying 7,200 points is a nice strong level, and 7,000 below that is a nice strong level. But given with 1, 2, 3, 4, 5, 6 and a bit weeks down here, what do you reckon? I don't think it's going to go down that far next time. I think it's 1 or 2 weeks down, maybe 3.
Did you not listen to what I said just a few minutes before?
I did, but I wanted to repeat it. It was that good.
Yeah, I'm like you. I think that it'll be down for a couple of weeks and then we'll turn around and go back up again.
So I'm excited about it, and I know people are nervous, and we're going to be talking about interest rates and inflation and with all the growth stocks a little bit later. But I know a lot of people, because of all the talk around inflation and interest rates going up and a recession, that big R word they're talking about next year, that people are going, stay out of the market. But now's the perfect time, isn't it?
Look, the only thing that could change my mind, just to sort of sit on the other side of the fence for a moment, is if something strange happens with the miners.
Yep.
So they're the real draw card at the moment. If they turn and reverse in a really strong way, then that would change my view.
Okay, so you're bullish on the market, I'm bullish on the market. Looks like after a couple of weeks down, we're going to go up into Christmas, probably, February, March?
Well, we know the chances of the market going up into that period is high.
Yep.
So therefore, the probability says it's high to do that. So therefore, it doesn't really matter if we have 1 or 2 weeks down now, does it?
So we're going to have a very Merry Christmas.
That's right. But January could be a whole different story, couldn't it?
It could be. What do you mean?
Well, January is often where people really get, it's like they throw a rock in the pond.
Yep.
Something all of a sudden happens and there's a big splash.
Yep.
And we see something turn. But what's really interesting about this year is, have you noticed how everything's been quite manic?
It has been.
For a lot of people.
It has. It's all over the place, manic.
And so as we go into next year, if you look at the Chinese calendar, it should, as the feminine energy comes in, it should actually soften things.
I think we need a bit more feminine energy nowadays. Is that it for the All Ordinaries Index?
Yes. Yeah, that's it.
Okay, so that's our thoughts on it, is it?
That's fine, yeah, that's all I've got to say at the moment. It's right at that nice resistance level at the moment, so it's doing everything it should, it's behaving, isn't it?
All right.
All right, that is it for our thoughts on the Australian market. Now it's time we get into our first email for the night. Our first question is from Noel. Hi Dale and Janine, I've been following Elders ELD and would be interested in your thoughts. It had a large drop a few weeks ago, supposedly because the CEO gave notice, I should say. I'm not a holder and normally a long-term investor. Thanks, Noel. That's showing that I need glasses, isn't it? That's terrible.
What's going on?
And the computer's on the other side of the desk. It's making me feel like I'm on an island here.
It is, but I mean, Elders is looking quite bearish, isn't it, at the moment? I mean, if you look at that since that high there back in May, it's dropped off quite considerably, Elders. And I know we've talked about it a couple of times on the show, but looking at here, it's down 35% to its close. It was down 37%, but I don't think that's anything to be worried about. I think it's just coming back to its normal sort of momentum and range. But
well, look, we did talk about this stock recently on the show, and we did think that it was possible that it could pull back. I mean, it was looking okay at the time, but there was a possibility that it could pull back. And from a pattern perspective, it was actually due for a pullback. But to see it gap down quite like it has is actually, on one hand, it's a negative, but on the other hand, it's a positive thing because you know that there's a high probability that the stock will eventually be oversold. You know, they will have sold it down too quickly and then it will turn around and settle down and go back up.
Well, it sort of looks like the case. I mean, that huge big drop through here, massive spike volume, and then volume's held up a little bit through here, but yeah, I think it's one to watch. What do you reckon?
Me too.
Okay. Well, Janine, we have our first text ever, which is from Tim. And Tim says, is FPH a buy or is this just a suckers rally? Well, that's an interesting question, isn't it? If FPH a buy or just a suckers rally. So let's bring up FPH on the screen and just have a look at it. Wow, look at this. A massive move up on
lovely, isn't
Fish
it?
and Paykel, yeah. So let's have
Okay,
a
so
look at
more
that.
and more people are buying appliances at the moment. Is that what it's telling you?
Well, I don't know, but obviously there's a big reason for that. That's a massive move, and normally when you see a move that sort of goes like that, that's nearly 20% it went up last week. I saw the move and it was in my report how much it moved up, but I didn't look at what caused the move. So
Yeah. Probability of it coming back towards $21?
Well, I think it's got to come back, doesn't it? I mean, when they go off this fast, and you can see obviously yesterday and today's bar, it's already started. So again, you know, I'm not saying it's a suckers rally but we haven't proven that it stopped falling. So we've had from that low, that's the low there at 16.11. That one is 16.11. So that's really the same. 1, 2, 3, 4, 5, 6, 7 weeks. You're going to have 1 or 2 weeks down anyway, at least on this one anyway. So I don't think there's too much to worry about it. But I think, you know, Tim, thanks for your text and thanks for being the inaugural text person. But I don't think this is a suckers rally yet. I just think it'll probably drop away for a couple of weeks and possibly give you a better entry at a better price. What do you reckon?
It's a really interesting chart, the way that it's unfolded for a start and the correction that we've seen on this stock and the fact that it's come back so hard. I think that and then reversed and moved up like that. But it really hasn't had a chance to test that bottom properly though, has it?
No, not this. That's this one here that I was talking about here, that $16.11. It's just been a strong, like the market just going straight up for 8 weeks. So it really does need to test that. But
now, if someone said to you that a stock like Fisher and Paykel was going to go up like that in this time right now, would you have, like with everything that's being talked about, not necessarily just what you know, but the mood that's out there, would you think a stock like that would do that?
I would have asked them what they were smoking.
Yeah.
Like seriously, you wouldn't have expected a stock like Fisher and Paykel to go up 20% in a week. You just would not expect that. I mean, it's a good stock, but does it do 20% in a week?
So what we're starting to see is we're seeing a lot of signs that are opposite to what people are expecting.
Correct.
Which is what really investors need to pay attention to.
Absolutely. So give us a text if you've got a question for us. We're here to take those texts, so the number should be on your screen right now. But before we get into our next email, if you are enjoying watching our show, then make sure you hit the like button now. Now, our next email is from Phil, who says, "Hi guys, I'd just like to ask you how I can go about getting my wife, whom I've just married, interested and understanding the stock market isn't this intimidating beast and is actually quite fun and can really help you set you up for the future. I have Dale's books, but I think she's more interested in watching something rather than reading it. I told her to watch your show and happened that this may help, or hope that this may help. We are renting and would like more disposable income for our adventures. I hate the 9 to 5, but I'm willing to learn this stuff to get ahead. I just think we would be better working as a team and not individually. Any help with this? Please, regards, Phil." What an awesome question.
What a fantastic
Well, congratulations for just being married, Phil.
Yeah, we should be saying that, shouldn't we?
I thought he was going to ask us how he keeps interested with his wife, but she's getting interested in the stock market. I know you're passionate about this.
Oh, look. I mean, one of two things could happen. Either, you know, that they create their marriage is a marriage of all sorts, you know, not just a marriage of love, but a marriage of their finances as well. And that's the ideal scenario if you can do that. But look, a lot of the couples and partners that I speak to talk about how it's impossible to be married in all areas. So because there are some people who, the husband and wife both trade.
Yeah.
And we remember the story of that couple. They had to have an office at the opposite ends of the house. Separate money, separate offices, separate computers. You do your thing, I do my thing, and let's just keep it like that, nice and sweet. And then there are the husbands that, you know, encourage and support their wives to do this, which is fantastic, because often they don't have the time to do it either. But it could be the reverse. It could be that the husband's got more time than the wife to do it, and so that they just juggle it that way. But I think it's really important that both partners have a good understanding of it. So he's hit the nail on the head in that regard, because what happens if something happens to the one partner? The other one needs to be able to pick it up, you know, not just...
Well, they do, but what if the other partner is just not interested in it?
Look, there are some people who are not, and I guess that's the agreement that they have to make, you know. And look, you know, I mean, I've had that experience myself. My husband's not interested at all. He'd rather play golf and, you know, hit balls. But, you know, go figure. I don't understand it, but
Well, yeah,
some
that's
people
fine.
love that.
But that's the point. That's what I'm saying is you know, Phil can't make his wife become interested in it if she either is or she isn't. It does help that she understands what he's doing, and what I mean by that is he wants to trade or wants to do what he's got to do. But there's also what you said, that really, really important word is agreement. What can I do? And so to me, it's like, well, can I trade 10,000 or 100,000 or 100 million, whatever that a figure is that she's comfortable with, or the other person is comfortable with. And then I've got a set of rules. Here's my rules. I've learnt what I've got to do. I know what I'm going to do. Are you okay if I follow this? And if the answer is then yes, then go and do that. But where we get into trouble with couples is when one is meddling who doesn't learn. And I know I had a student the other week whose husband was telling her, oh, you know, you've always failed at stuff. I failed at the stock market, so you will too. You're not going to be any good at it. And I just said, stick your finger up at your husband and tell him to go away and to leave you alone, because he's not qualified to tell you that, because he would have been a gambler and just throwing money at anything and not have been educated. I said, you're doing the right process. So I said, tell your husband to bugger off, leave you alone and let you do what you're going to do, because you're very good at what you're doing, and I will help you be successful.
Are you a qualified marriage counsellor?
No, but that's what I said. But we've also had other couples where, you know, I've had to have a chat with the husband and saying, stay out of your wife's road, you know. Oh, yeah, but I'm interested. I said, I don't care. If you want to make money, get out of it. Leave it alone and let her do what she needs to do. But I've also said the opposite to wives. I've had wives ring me up saying, how do you fix my husband? I said, that's your problem. I'll get him trading well, but you have to stay out of it.
Yeah.
And so from that point of view, but anything else you want to say? But I think it's a good question.
Yeah, I think it's a great question.
Okay, well, next we've got, I believe it's a text, on YAL from Steve. It says, PE and dividend look good. There is Dow entry at $7.16. So how about we bring up the stock?
Okay, I can only just reach here. Do you want to type it in?
What was the stock?
We have to work as a team here.
What was the stock again? I forgot.
YAL.
YAL. Sorry, there we go. YAL. Type it in. Let's have a bit of a look at it. Yand coal here. So, what do you reckon, Janine?
Well, the first thing I'd be doing, when you do analysis on any stock, the first thing you do is you want to make sure your data is up to date. So if ever I see any gaps in data, the first thing I'm doing is saying, let's go and have a look. So I'm going to ignore that for the moment.
It could be faulty data, that's what you're saying?
Not faulty data. It could just be that your
not up to date.
Your laptop isn't up to date. Yeah, so you need to do some.
Sometimes I'm not up to date, but I'm sure the laptop is.
Okay, and look, right now it doesn't look bullish to me at all.
I still have floppy disks.
It's stuck in a sideways move, right? So what does that mean? There is indecision. It's neither bullish nor bearish right now, and it could turn bearish if it goes back up and hits these highs here, which occurred. What's that about? You have to be my eyes.
That is $6.23.
Somewhere about there, and then starts to move down in a big way. Well, then it's probably going to take out that low. But if it heads above, I'd say 640 really strongly, then we could see a nice move out of it. So,
but I disagree with his analysis. There's no buy there and no buy in the rules that he's got.
There's no buy there right now.
So definitely no buy there and that sort of stuff. But look, it is holding up, and you know, if it does take off, it does take off. But it may give you a rise. Is that it on YAL?
Yes, look, it looks like we've got another text coming in, Dale. Oh, this is really exciting. This is like a game.
It is.
Oh, gosh. Oh, look, we've got a text from Dave, and the stock is TPG. Can you type that in for me, please?
Already done.
Ready to buy, giving buy signal at $5, question mark. Look, is that a buy signal there for TPG?
Not in my book.
Not in my book either. Sorry about that, mate. I think really good try. It's come off a bottom. You need to learn some rules and how to, you know, make that assessment. Even the Trading Mentor course, but Dale actually answers those emails personally himself.
Everyone.
Will give you a rule that you can use that would help you and manage your risk really well on stocks like this. But anyway, it looks interesting at the moment. But what do you think long term, Dale, while we're on it?
Long term, I mean, have a look at this. I mean, it is, TPG is a growing business. It's expanding all of the time. But as I was saying yesterday on my market report, and I was talking about Zip, you know, because Zip's tanked this year, like absolutely tanked. I was talking about the boom bust or the bubble cycle that Zip went into. But I said it's in a competitive industry, but it's in an expansionary phase. They're expanding around the world, and that takes time and money. And same with TPG. It's trying to tackle the big players on the marketplace, and it is, it's bought Vodafone, it is iiNet's part of it as well. There's a few others all part of that TPG network. So to me, it's putting a lot of time and effort into really solidifying itself as a major telco in Australia, and it's doing that right now. It has done that, but that takes time and money. So therefore, where are the profits happening? And when the profits really start to come, I think it'll take off. But right now, it's way too early, I think.
I agree with you.
Yeah? Anything else you'd like?
No, I think it's an interesting stock. Keep it on the watch list, but just be mindful of what we were just talking about then and enter at your own risk.
Enter at your own risk. But if you do have questions for us, and remember, you can text us tonight. We're not taking phone calls because we're in a completely different studio and we can't get our phone system working, but you'll have more opportunities later in the show to give us a text and tell us what stock that you want us to talk about or the question you might have for us. So watch out for the phone number on your screen. But it is time, Janine, to get into our topic for tonight. But before we do, I think it's time for everyone to give the show a really big thumbs up to show the team that they like and appreciate all the work that goes into producing the show each and every week, not just tonight, which was a mammoth effort. So click the like button now. It's just down below the video. So make sure you pick up your pen, pick up your mouse, and click that little button there. I also wanted to remind everyone about Talking Wealth TV. Now, things are changing in 2023, and Janine and I are doing lots more content. However, it will be exclusive to Talking Wealth TV. We will still be doing some bits and pieces here on YouTube, such as we're going to be recording our long-standing audio podcast. We're going to do that on video as well as audio, and then this will go up here on our YouTube channel, so you still get to see Janine and I. Our live stock market show will be streamed from Talking Wealth TV next year, and so if you've not already registered on Talking Wealth yet, head over there and do so after the show, so don't miss out. Now, you have asked us for training, and I know you've asked us so many times for training, and so we'll also be conducting some live training on Talking Wealth TV. So that's Janine and I presenting and training you live on Talking Wealth TV next year. Again, this will not be shown on YouTube. We are making Talking Wealth a place that makes gaining great education really easy for you. And along with the content that Janine and I will do, we will talk, and we have spoken to lots of experts from around the world, and I've asked them the questions that you really want answers to. So rather than play Russian roulette with your time and your money here on YouTube, you know you can trust the content on Talking Wealth TV. So check it out now by going to talkingwealth.com. Now remember, if you register, you can enter for the chance to win $50,000. So check out talkingwealth.com. Now's the time for the topic, Janine.
Wow, I'm just still getting over that $50,000.
A good Christmas present, isn't it?
It's exciting. Look, talking of good Christmas presents, I was speaking to someone the other day who's got a business and he employs young people.
So what are you buying me?
Oh, do we have to make it all about you?
What are you talking about, Christmas presents?
I'm talking about, look, this is about young people,
who
don't know a lot about finances, and their employer's actually taken an interest in them and are they're at the moment considering a Talking Wealth membership as a present, as a motivational tool, and to help educate them in future, and build their knowledge up. So, I mean, it's like the Matrix, isn't it? It's almost like download all that information.
I feel like we're in the Matrix.
Fill up those young people with all of that at such a young age, and can you imagine the impact on their lives over time?
That sounds awesome to me. Can we get on with the main topic?
Just got to get them to watch it.
Can we get on with the main topic now?
Actually, Dale, it's getting close to Christmas, so before we launch into the topic, it's time to get into the Christmas spirit with a happy minute.
A what? Is that something you just made up? You know? Am I going to enjoy it too?
Yeah. Now, Dale, this is about spreading the Christmas cheer, and there's no room for a McScrooge on this show.
I'm like, what? Was this some sort of new hamburger from the Golden Arches, Janine?
No, said McScrooge. That's what I was talking about. McScrooge, did you hear that?
That's what I thought you said.
Not McDonald's.
Well, I was really hoping I heard you wrong. And are you trying to imply something about me?
Well, maybe, but let's not have it out here on the show, although some viewers may enjoy that. So how about we get back to the happy minute? You see, Dale, the happy minute is what I decided to call my joke time.
Maybe happy for you. Did you get approval for this? I haven't heard about it at all.
Remember, this time of year is about being nice.
I have to be nice just because it's Christmas, Janine. I'm nice all the time, regardless of whatever the date is. So just hit me with whatever happy minute is before I change my mind.
Yeah. Okay, Dale. Who is Santa's favourite singer? Gotcha, haven't I?
That's a tough one. How am I supposed to know?
Too slow. Time's up.
Yep.
Right? It's Elvis Presley.
Jeez. I'll give it to you. Now, everyone has to click the like button for Janine. After all, as you say, we are heading into the season when we need to spread good cheer. So let's cheer Janine up by giving her a like. Speaking of spreading good cheer, Janine, as Janine mentioned earlier in tonight's show, we are going to update you on some of the best growth stocks to beat the market in 2023 and in the next few years. So we're going to do that, aren't we?
That's exciting, and I cannot wait for this. If you've been following the show for a while, you're more likely to have already begun to set your sails forward and are looking ahead to 2023 and beyond in anticipation of the next rise. We completely understand if you're getting tired of the volatility which has occurred over the past 18 months and just want to see the market return to its longer term uptrend sooner rather than later. And we know that good growth stocks will play an important role in seeing that happen, and many are currently paying dividends, which is a bonus.
Well, that's right, Janine. Now you can have both capital growth and dividends. How many growth stocks you include will depend on your portfolio goals. Now, some of you may have a portfolio goal for growth, and so dividends are just a bonus, while others prefer a balance between growth and income. And right now, many traditional growth stocks are paying good dividends, as we demonstrated in last week's show, which was all about the best dividend stocks for 2023. So if you missed it, make sure you catch it up and watch it. Now, in a moment, we will run through some of the current stocks on our list that have the potential to grow in coming years. Now, we will also touch on the best times to buy.
You may have noticed that in recent days, there's been a lot more talk about growth stocks, when previously the mantra was all about value stocks. When you start learning how to read the market, you'll stop paying attention to the masses and the media and see how at times sentiment is slow to change, while at other times it can change quickly.
No, that's so true, Janine. Now, whilst we pay attention to the themes in the media, we do our own analysis, and we often have different views on it. Now, this is because we ask the opposite of what is being conveyed to the masses, as forecasts are often wrong or a worst case scenario.
So true, and that makes me think about the saying, what we fear most has less than a 1% chance of happening. And we applied this to what was being said about recession in mainstream. Remember what you heard prior to the GFC and even when the market was falling initially? While we were telling people we thought the market had further to fall, that wasn't the message in the mainstream. It was not the message until it had the biggest fall. So coming back to interest rates, when central banks are tightening quickly, the messages are very much fear-based.
Now again, it's about controlling the message, Janine. I really think that. And so markets pull back and they tread water before taking off again when the policy softens or when the talk of recession changes. Now, whilst further rate rises may occur in 2023, or they're likely to, in the US and in Australia, the focus now is all about how long it will take for the recent rate hikes to take effect. And remember that the market is always factoring in the information 6 to 12 months in advance. And if early 2023 the commentary softens further from central banks, the market will take off again.
We know when interest rates rise, value stocks are preferred as they provide more reliable earnings. However, when the market gets a whiff of a policy change, which has occurred recently, growth stocks that provide an opportunity to generate higher capital growth have the potential to be revalued.
So it's important to understand that a talk of recession does not signal a financial collapse. But the word recession really does scare a lot of people, and it has been a word used so often in 2022. But always expect the opposite of what you hear. And when the market starts to move, the right messages will also be there. What you hear depends on what you're focused on. Fear sells more than positive news ever has.
And that's terrible, but you're right. After having heard so much about recession, the masses believe it's a given. But interestingly, the current message from JP Morgan is that the US will not go into a recession. Continue to observe the messages from major financial institutions about the US and the Australian economy in the months ahead and monitor how they change. So, who's right?
Well, you said I am. Well, it won't be the first time you'll have heard us say this. The charts don't lie and are far more reliable, or they are a far more reliable indicator of what is really going on than what you will ever learn from commentary from mainstream media. This is where those in the know will tell you what they want you to hear to control you. So understand that if you follow what is said, you do so at your own peril. Now remember, your best reference is a chart. And we like to think this show is another great way to get a different view, so you keep a more balanced perspective on the market.
Now, Dale, you know it would be easy for central banks to overshoot their targets when tightening. And according to an article put out by Forbes, the World Bank believes this is what will occur and has said that currently central banks are synchronised, whereas historically they're more likely to respond to local market forces. The impact of the pandemic and flow-on effects have created an unusual situation. Now, Dale, let's take a look at a pretty graph that was in the Forbes article to appreciate the scale of the tightening.
Okay, let's have a look at that.
So you can see rate rises in Canada, the US, Australia, the UK, and to a lesser extent Europe, and also tightening while Japan was actually flat according to the graph. Now, don't you think that graph is beautiful, Dale? It's a piece of art, isn't it?
Janine, I always thought you were a nerd, particularly in the early days when you'd bring your computer to dinner. Like seriously, you dated a laptop. But the way you get excited over graphs and charts is probably how I get excited about bikes and cars. And of course the Cats winning the premiership this year, I got really excited about that. And Janine, I may not completely understand you, but I do appreciate the way you think.
Thank you for that. You know, Dale, given the topic tonight, I just wanted to say, gee, I really appreciate how much you've grown.
Can we back that to the topic before this turns into Days of Our Lives and gets soppy? How much I've grown? You're talking about me eating too many curries.
Yes, I'm not the soppy type, okay? Well, Dale, further to the graph and talk about interest rates, this is indicating what we expect. That is, while we may see further small rises, eventually the pendulum will swing the other way. The World Bank believes that central banks will get it wrong, and the biggest concern now is that it takes around 18 months for interest rates to take effect and for the data to catch up.
So true, Janine. Now, I think a few central bankers will be crossing their fingers now. Forbes also reported that the market expects the RBA may overshoot its target and reverse interest rate hikes. Now, it is pricing in a 50% chance of a rate cut in 2023. Now, the article went on to say that the Commonwealth Bank has a bolder prediction, 2 rate cuts, each 25 basis points in late 2023, as the RBA realises its work is well and truly done.
It's so interesting how the commentary is changing. All good signs for our market for 2023 and beyond. There is so much more we could share, but we need to leave time to discuss the stocks.
Okay, so given we believe the signs are there and the market is setting up for the next growth phase, what are some of the best growth stocks we're going to talk about tonight, Janine? Get into these charts.
Look, now, Dale, you know that the tech stocks will get a mention and the miners.
Yep.
So let's get into the charts and have a look.
No banks.
Well, I didn't say no banks. I like banks.
You said tech stocks and the miners.
Well, this is where it gets really interesting.
Okay,
so let's have a look.
So I've got to bring it up.
Do you want to do your job?
Oh, I've got to put my glasses on. You go
Right, how about I bring up something?
You bring up something.
Now, we know that BHP is an interesting one, okay? So this is one of the first ones that we'll talk about. So just when I think of BHP, think of FMG, BHP and Rio, okay? Because we always have FMG on our list as well. BHP and Rio tend to be quite similar in terms of the way they have unfolded in recent years. And FMG is one out of the park that tends to be a much higher rated growth type stock. But what's really interesting is that the PE ratios are really low, as you know. And when that happens and they're paying much bigger dividends, there's this confusion between value and growth. What's value, what's growth?
What's growth,
But these stocks historically are growth stocks, regardless of whether they're wearing some sort of a dress at the moment that is not, what they traditionally wear.
Yeah, well, right now that's right up near its all-time high. So it's recently hit, and this is a monthly chart, so we're only like a few days into this month. 47.26. There's 47.90. And that all-time high is 48.57, so it's really close to that all-time high. So
now, if we're expecting a few weeks down on the market, and that happens, then we'll see BHP, Rio, and FMG ease off somewhat.
Okay.
What we've got to watch for now is whether there's a more serious correction in these shares, which will determine the outcome we were talking about before with the market. But I still think, even if there is a further correction to come, that they will still, at the end of the year, turn around and be a growth story for our market.
Okay.
So I will always have at least two of the big miners on my watch list. That's the first thing for growth. And then we've got BlueScope. This is a stock that we really like. We think over the long term, we think that it could be quite a good share. I mean, one of the things that's interesting about growth stocks is historically they've got a record of really good earnings, right? Which this one does. So sometimes you can have growth stocks, as you know, that are a little bit more speculative because they don't have that earnings history behind them, but they show on the charts technically. It's not the way that the industry talk about it being growth, but it's more what we talk about because of the way that it trades. And they might have relatively low dividends, But at the moment, we're seeing really good stocks having reasonable dividends and the potential for capital growth. But you just need to make an assessment on each share when looking at them, whether you think it's a good growth story for 2023 or whether it's a growth story for 2023 and beyond. If you've got a growth type portfolio, it's really important to make that judgment, because just because we sit here and say that one of the stocks on our list is a good growth stock doesn't mean that we think it's going to be good for the next 5 years. It might not, depending on the cycles on this stock.
I was actually sort of talking about this with a trading mentor student only this morning, answering one of their questions, was talking about saying it's not just about the content, it's the context that you put it all into that changes everything.
Yeah.
Changes everything from daily, weekly to monthly to yearly. So, the portfolio style that you talked about, with growth stocks, what kind of growth stocks do you want into it, and how you're going to balance that portfolio out? What I find is, and what I find when people do send me their portfolios, because I had another trading mentor student send me their portfolio too, and it wasn't a bad one actually, this one. But often we just see it's like spaghetti, throwing spaghetti on a wall. There's just like crap everywhere.
Because they get confused. Their growth strategy is with stocks that are outside of the time frame. So Commonwealth balance between growth and income. And you'll always get that income we've said, which is that we think we've got more of a, but don't discount when you look.
Put Macquarie in a growth stock.
Their whole outlook will change for it.
Over the past 1 to 2 decades. A lot of people thought this would do so.
It is a good sign. So that BHP have held up so well, Reece.
And 2022 has been one of those years of lots of need to expect the unexpected, because that's what's been happening in 2022.
Yes, periods of volatility in there, but I think
back to more normality, I think.
We'll settle down. Australia and China are now talking, and so we're just
off, I think, isn't it? 2 months, January and February.
Yeah,
I'm not sure.
I mean, I've done some whole area of the market.
But only if everybody, they've never given us a thumbs up before, they should be doing it today. Next DC.
$6-7.
Yeah.
So we may not have seen the technology type areas. Could be something that happens in the second half of the year.
Move on. Okay, so let's move on.
Burst into the studio and tells me otherwise. Necessarily, it's a stock that grows in spits and starts.
Yep.
Now, TWE is a nice little story. Markets in other countries. So, I think that there's upside potential. Hang on, can I just have a sneak peek? But Wesfarmers is actually looking really nice. It's just like the
stocks. But that is it for our topic. What we're doing, make sure you hit that like button now. Time to get on and get.
It is to rise to that point. Cheers. Really good question there, Jack.
Well, that aside, I mean, obviously $30 in, but that should never be your focus. Its focus is good stocks. 8 to 10% max. A few $100 off.
2,000, I think, Jack's.
That's a good idea.
If you put
anyway. Good. I think it's from Al, who bought at 80 cents, and he has got a target of $1.10, which is nearly at.
So is that the 80 cents there?
That's pretty close to 80 cents. You've done
so
well.
We don't know whether he's bought it on the recent pullback or whether he's bought it over here. Now, if he bought it here, that'd be just.
I think if it does come back and find some really good support, around that 90 cent sort of mark-ish.
And it's orderly.
I mean, he's not saying he's going to exit it.
Do is sort of look at it and think, well, I've got to buy low, and a solid rule there.
Yeah.
Yes. So but he's looking promising to trade up to and break
Below, but it's looking good at the moment. I think it's a good trade. What do you reckon? I'd like it.
Look, I actually think it looks lovely.
Looks beautiful.
Yeah.
I think
and
Andy's done well.
Even if it has a pullback, I mean, you wouldn't be concerned about that as a trader, but just one thing, if you look at 9 there, that first run up,
very
and
nice.
5 on the next one. So it's in that zone to have a pullback, isn't it?
Yeah, it'll likely have a bit of a pullback over the next few weeks. This one is from Matt.
With our viewers.
Why? They want to text, they don't want to talk.
They want to text.
Wants us to have a look at Dom. Forum has taken off like a rocket.
How would you have got in there, though? That's the only challenge, isn't it, during
Well,
that
it
week?
is. It's one of those big moves. But look, it's not even weak this week here. There's only 2 days. But the other bars we're looking at for this week, Monday, Tuesday's data, have all looked weak. Domino's is still looking strong. There's a lot of volume coming through it. There's a lot of people seeing it. You'll see a lot of people on chat forums go, hey, Domino's, it went up X percent that week. So we're talking about another 19%. It sort of overheats, then it'll come back in its momentum and then it'll take off again. So at this point in time, look, I'd be not getting in. I'd be just waiting for a little bit of a pullback to take some of the heat out of the stock and then get back into it. But I do like it.
Gee, they're making us work hard tonight. We've got another text from Alan this time. Oh, but he just wants us to provide a view on
10 weeks up. Like seriously,
It's
how
lovely,
often does
isn't
it do that? That's lovely. But again, the more it goes up, the higher the probability it's got to come down for 1 to 4 weeks,
Yeah,
roughly.
okay.
And so at this point in time, would I be clear to turn around fairly soon for the next few weeks? But there'll be better buying opportunities. And that's what I was saying in my market report is whilst the market's going up, a lot of people, what we find is a lot of people get in looking because they got in at the wrong time.
Yeah.
So that's included this is I think it's really important to share with you. You should do one of our courses, but fear of the unknown, it's the type of question that we play in our minds, like what if self-talk that goes on and it's stopping people from doing really comes up all the time, and so the delay coming, given what is covered and the supreme. As I'm pondering what to write as feedback, I think it's important to provide some personal context so that my feedback will make more sense. I've been trading for a long time, nearly 2 decades, but I haven't been very successful at picking winners. That doesn't mean I've lost a lot of money either. I became familiar with Van Tharp's work on position sizing, money management, and risk multiples early on. My problems were that I liked indicators and had only a short-term view of the market, daily bars over a 6-month time frame, and was familiar with too many different strategies from too many popularised authors and gurus. I was pretty good at writing formulas in the charting program I was using and even designed several indicator-based voting systems for both entries and exits, but they were never consistent. I think I had a very broad but shallow depth of knowledge and couldn't work out why I wasn't more successful. Like Dale often says, something like, the stock market is the exchange of wealth from the uneducated to the educated. I was one of the uneducated and now I'm fixing that. I've tried trusting financial planners with my superannuation and learnt the hard way. That's not a very educated thing to do. The books, videos and the Trading Mentor course have helped an enormous amount because they've narrowed my focus. I like to start with the stock's long-term view and work my way to the shorter from there. I don't worry about indicators anymore. Phew, what a relief. I could and can look at a chart and see the price direction, but now I can see an entry without an indicator in sight. I've just enrolled in the diploma course and am looking forward to gaining a deeper depth of knowledge. Wow, there's a lot more work to do in the diploma. Well, that's my feedback. Thanks and regards, Andy. Now, I thought it was an amazing email because how many people have you heard like that?
Quite a lot.
A lot. And they don't study with us for a long time, and then they say to us, I wish I'd started this a long time ago, because of the fear. They think they know stuff, but as he said, he really didn't know. And we're talking about our beginner basic course here. We're talking about stuff that's, you and me know it's just scratching the surface, but it's great content and it's good, it helps people. But this is a guy that's been trading for 2 decades and read lots of books and all sorts of stuff. and thought he knew how to trade, but realised now that he doesn't. So to me is, if you are that sort of person and you're a bit fearful, then give our team a ring.
We've had a lot of people from public service that have actually enrolled in the Trading Mentor course from all different disciplines of public service, from police to fireys, all through. And that's one of the things that I've just been amazed at, that people who are quite capable at doing lots of other things physically, and then when they see this, it just makes everything seem so much simpler.
Yeah.
They never thought they could do it.
What makes me gets, I won't say upset, but it's people that say your Trading Mentor course at just under 2,000 is expensive, and it's like, seriously? It's like, ignorance is expensive,
Compared
not
to
the
what?
course. If you think that, then wow, you shouldn't be trading. But anyway, that is our thoughts anyway on that. And thanks, Andy, for sending in that email. I really do appreciate it, and thanks for letting me share that with everybody.
Now, you have been asking us questions, and each week we ask you for your thoughts. Last week we asked, if you go on holiday, do you leave all of your trades open or sell at least part of your portfolio? And if so, why? And if in the past you simply held, was there a time when you were worried about losing money while away? Now, we liked all of your responses, and thank you so much everyone who made the effort to communicate. We would love to hear from more of you. As I'm only permitted to choose 2 responses, I went with the first 2, but also valued what you had to contribute, Donna, so thanks very much. The first one came from Red Brick, who said, Janine's joke time, a brilliant addition to the show.
Thanks.
Stereotypes, I really laughed at that one. In my younger years, I was an audio electronics service technician, and that joke reminded me of my thoughts on the electronics design in one of the brands mentioned, and how it was literally a joke. When I was clueless and trading the stock market, I never even thought about selling my positions for the Christmas break. When I thought I had some idea about the stock market, I thought that selling before the Christmas break was a good idea because a trader had mentioned in a YouTube video that it was a good practice to err on the side of caution, just in case something had happened over the period. And now that I've completed the diploma, I'm going to trade over the Christmas break and not give a second thought. I took a quick look over the chart history of some of my stock choices during the past holiday periods, and I didn't notice anything untoward happen over the Christmas or any other holiday period. I would also like to thank you, Dale, for sharing your thoughts about the upcoming RBA rate hike and no potential implications. I really appreciate it.
And a nice email, or nice comment. Anyway, the next comment was from somebody called Josie Penny, who said, I still watch the market when I'm on holidays. Holidays get away from home and work. I enjoy watching the market and trading while I'm on holidays. But if for some reason I couldn't watch the market, I would set stop losses on everything and get excited to see what sold and what didn't sell when I recheck my stocks. Thanks again, guys, for another good show. Looking forward to doing your short course one day. We applaud you making sure you have stop losses in place in case for some reason you're unable to monitor your stock, so you really do need that. Now, the only thing to be mindful of is that prices may at times gap down below your exit, and if they do continue to fall, you could return to find yourself sitting on a much bigger loss than you are comfortable with. Now, some set guaranteed stops, but you do need to weigh up the pros and cons of doing that. There's nothing like having a plan B, I reckon, Janine.
Yeah, exactly. Thank you so much to everyone who did comment last week. We do love reading your comments, so keep them coming. And this week's question is, are you likely to be buying stocks over the festive season, taking a break from your investments or finances, or have you planned to finally do something about your situation and get educated? Let us know how you will approach the holidays. Remember, we are here to help, so make sure you set yourself a goal to speak to a member of our team before we break for the holidays.
Okay. We look forward to hearing from you all, absolutely. So please do comment there.
Remember, if you're listening to us on a podcast, we do not want you to miss out, so you can still send us an email with your answer. Before you do, give us a 5-star rating and review on whatever podcasting app that you're using. If you can share a link to our show with friends and family, we would really be grateful.
Yeah, and I want to remind everyone to head over talkingwealth.com and check out Talking Wealth TV. And whilst you're there, remember to enter to get your chance to win $50,000. So go to the website, talkingwealth.com.
Also, if you have enjoyed tonight's show, remember to hit that subscribe button.
If you want us to answer your questions, then watch our show next Tuesday. It's the last one for the year between 7 and 8 p.m. Australian Eastern Daylight Savings Time. So pick up the phone and you'll be able to give us a text and we'd love to chat with you. But if you are not able to watch live, you can email your question ahead of the show. You do this by sending your email to info@wealthwithin.com.au. And remember to include Wealth Within Live in the subject line.
We really appreciate your support to show yours by subscribing to our channel, please. Hitting that subscribe button now. Well, that is it for tonight's show. We do hope you enjoyed what we presented tonight, and we've so enjoyed receiving all of your emails, and thank those who text into the show. We really loved the opportunity to hear what was important to you.
Okay, and as always, thank you for joining us, and we do hope you have a great week. But for now, goodbye, good luck, and good trading.
Bye for now.